Joining us now is Charles Bobrinskoy, the vice chair at Ariel Investments. You were Halo before Halo was Halo, Charlie, so it's good to see you. Welcome.
Thanks, Kelly. Great to be here.
And you and others have been positioning for this era of, here's why I'm going to struggle with the word inflation for our audience who was just listening to the last segment. I do grant there is a difference between the price of stuff is going up and there's inflation. Because if the price is going up and I'm making more money, there's inflation. If the price is going up and I'm not, that's called possibly a recession. So I'm trying to figure out which landscape we're in right now.
Yeah, so you're talking about real wages. Real wages at the upper end have been positive. Real wages have been okay. But that's not how people think about it, Kelly. When I get a raise, when I'm a construction worker or a roofer, and I get a 3% raise, I think I have earned that raise. And if I have to give it all back in inflation, I am mad. I don't think that I am equal. So right now, that's the people are thinking right now. They are getting raises. Minimum wages actually are up across the country. Upper income people are benefiting from the higher stock market, but they feel they've earned that. And it's being taken from them by higher inflation, and so they don't feel good.
Let's talk about APA, formerly Apache, and a stock that has just been on a tear. The whole energy space is up 30% this year. But do you, as someone who's positioned with these names in your portfolio, what happens if in a couple of days, somehow a week or two, I don't know, there really is more of a ceasefire on the Iran situation? Does all of that go away?
Yeah, so the market is already predicting that. The market is in backwardation, which means that the forward curve has a lot lower price than the current curve. So when everybody is expecting negative things, that's usually a positive for a stock. And these stocks have traded as if people aren't going to be using oil and natural gas in the future, and we think they are. So the reason I pounded the table about Apache APA is because it was trading at a PE of about 5. It was trading at 2.5 times EBITDA. It was trading as if nobody's going to need oil and gas in the future, and that's just silly. So APA, we think that in the U.S., demand for electricity is going to come mostly from natural gas production. We're not going to have enough wind and solar to power all the data centers. We're going to use natural gas to do that. And so APA is very well positioned for increased demand for natural gas.
You know, I suppose I look at, we're at session lows today. People are not too happy to see their balances go down. You know, we're 10% off the highs for a lot of the major averages. It'd be one, I think you've made the case for why this should be in people's portfolio, if nothing else, as a safety blanket. But what happens with the broader indexes?
Well, I'm always going to say there are two different markets right now. There still are. The S&P 500 is still dominated by large cap growth stocks. Those stocks got grossly overvalued. It is true that you can do pretty well by buying index funds, but last year, they were no longer a safe place to be. And so value stocks like Apache, like energy stocks, got extremely cheap, while the S&P got extremely expensive. The market is down this year. Our value index, our value portfolio is up about 7% this year. So value investors are feeling pretty good.
So and as you say, the most important factor is inflation. I think a lot of people would agree with you. I mean, even the gains we've had off the lows a few years back have been from falling rates and to some extent falling inflation. That has all stalled out and stopped. Your positioning is working out. My question for you is, what should the Fed do against this backdrop?
Yeah, this is a point I just listened to the conversation you just had, and I don't think the Fed has the power right now. It has an influence, but it can't change inflationary expectations in the next 6 months. What's causing inflation right now is a whole cacophony of different policies, including tariffs, including massive fiscal deficits, including less globalization, even less immigration, which many people support. I probably in principle support, has got an inflationary aspect to it because wages go up. So we have all of these policy factors, not just the Fed, that are contributing to more inflation. Right now, expectations for 10-year inflation have probably gone from the low 2s to over 3, which is why the 10-year is over 4, close to 4.5.